Vietnam's GDP was forecast to have reached $450 billion in 2024, ranking 34th globally. By 2029, it's expected to surpass Singapore's, hitting $676 billion. Vietnam's economic strength lies in its manufacturing and exports, with major companies like Samsung, Intel, and Nike having significant production bases there. It has a youthful and increasingly educated population to support its expanding economy. The country has large exports of rice, coffee, and seafood. Vietnam's strategic Southeast Asian location provides access to major shipping routes and key markets. India's growing ties with both ASEAN and Vietnam bode well for the economies of South and Southeast Asia. Investments in infrastructure, transportation, energy, and technology boost Vietnam's economic capabilities and attract FDI. Investor concerns arise from Vietnam's recent anti corruption drive, which has ensnared many officials and business leaders. Notably, a top property tycoon received a death sentence, and a leading soft drink company head was jailed for 8 years due to alleged billion-dollar frauds.
Whether they will continue with the same intensity or not, or will they lessen the intensity to balance between economic development and fighting corruption, is something we need to watch.
Ho Chi Minh City opened its first metro line in December after years of delay. Built with Japanese financial aid, construction started in 2012 and finished 12 years later, costing over $1.7 billion, more than double the initial $668 million estimate.
Decision-making has slowed in Vietnam, and people are afraid to take certain kinds of money from foreigners because it might cross the line and get them involved in accusations of corruption.
Metro rides will be free for the first month. Vietnam plans 6 more metro lines in Ho Chi Minh City. To sustain growth, it aims to improve labor productivity, invest in education and advanced technology, which are crucial for narrowing the income gap and solidifying its regional leadership. Ties with the US have improved over the years.
Next year, the year of 2025, would mark the 30th anniversary of the normalization of relations between the US and Vietnam. And we have seen rapid, comprehensive progress in the relations of the two countries.
By 2039, Vietnam's GDP could reach $1.41 trillion, ranking 25th globally and becoming Southeast Asia's third largest economy. This growth underscores Vietnam's resilience. By 2025, GDP per capita is expected to rise to $4,783, classifying Vietnam as an upper middle income country. The Economic Brief, DD India. Let's turn to our guest once again. Mr. Taneja, will, a tight government control deter investment? Because, death sentences to top businessmen may not be sending out the best signal.
Well, not exactly. In fact, it sends out the right message that the government is on it. I mean, there have been some reports, but I think if you look at, for instance, compare Vietnam today and Vietnam 10 years ago, country is doing very well. Let's not forget one thing. When we look at the geopolitical landscape of Asia, in particular Indo-Pacific, Vietnam is a very, very important country, especially for countries like India. I mean, in order to ensure that the future Asia is kind of more conducive for us, more kind of, compatible in terms of how we look at Indo-Pacific, it's important that Vietnam becomes bigger economy, is more successful. The same goes for Japan and, of course, South Korea, but very importantly, at the same time, Indonesia. So Indonesia and Vietnam are two very important pillars for us as far as our Asian security is concerned, geopolitical security is concerned, economic and energy security is concerned. So therefore, Vietnam is a strategic partner for India, is a strategic partner for the United States, for Japan, for Korea, for Indonesia, for Australia. There are, of course, some challenges because the political system is very different. But the message is that they're working on it, making sure that more investment can flow in. And Indian companies are also flowing there.
Absolutely.
In fact, ONGC was one of the first foreign companies to go and invest in Vietnam. So we are a strategic partners. A prosperous, stable, Vietnam is in India's geopolitical interest to make sure the future of Asia is multipolar, it's not unipolar. If we want to make sure Asia tomorrow is multipolar, Vietnam must succeed, Indonesia must succeed, and we must actually grow even faster.
Professor Chaturvedi, the metro line in Ho Chi Minh City, it took 17 years to build, from inception. The cost delays made the cost nearly triple. How would investors look at that kind of delay?
Mark, let me take just one step back and support what Professor Taneja was mentioning. See, economic strategies of countries and the countries that are excelling, and as your report said, they would be the third largest in ASEAN and 25th largest in the world. These are those countries, Mark, which are focusing on interlinkages between trade, investment, and technology. Vietnam is a very clear example. If you see last 11 months, the trade surplus for Vietnam stands at $24.3 billion. And the FDI in the last 3 quarters is $22 billion. And your report very clearly showed the emphasis they are making on technology. So this, I think, is absolutely clear in terms of business orientation of Vietnam and the country which is realizing and putting fundamentals in place. And I think the countries which are conscious of this and aware of these interlinkages at the sectoral level, they are the ones who are going to excel. So I do not see any problem in terms of how the combination of a very generous fiscal support to the projects like Metro and also very flexible monetary policy. So with this, Vietnam is likely to move ahead. The delay in the projects are part of the game, but I think investors are getting the message very clear.